What made the streets of late 1700s New York buzzing with energy, ambition, and chaos? Merchants carried goods and ledgers through crowded thoroughfares, shouting orders to dock workers and scribbling hurried notes about shipments, debts, and sales. Yet beneath the bustle of trade, a quieter, more intricate world was beginning to emerge, one where influence and reputation held as much value as gold or silver. These were the streets where early brokers first began to shape the foundations of Wall Street. Unlike the tavern-bound speculators or merchants trading casually for profit, these men understood that commerce required structure, trust, and rules. They were visionaries who saw beyond the immediate exchange of goods. They envisioned a marketplace where finance could grow systematically and where deals were executed with accountability and fairness. These early brokers were often immigrants or second-generation Americans, driven by the dual forces of opportunity and survival. They operated in a world still raw from revolution, where political and economic systems were in flux. Paper currency and bonds were circulating, but the mechanisms to manage risk, ensure fairness, and calculate long-term value were rudimentary at best. Brokers quickly realized that to survive and thrive, they needed both connections and credibility. Reputation became a form of currency in itself. One wrong deal could destroy a career, and one strategic partnership could lay the groundwork for a lasting empire. They began to congregate, not under the shade of a tree as the Buttonwood Agreement brokers had done, but in coffeehouses, rented rooms, and informal offices along Wall Street, sharing insights, gossip, and strategies. Here, in the intersection of ambition and ingenuity, a new kind of worker appeared, shaping life beyond the city streets. The environment was both exhilarating and precarious. Markets moved on rumors, wars abroad affected local securities, and everyday transactions could turn into legal disputes. Brokers had to navigate the unpredictable tides of trade while maintaining relationships with clients, merchants, and each other. In this era, there were no regulators, no electronic ledgers, no standardized processes, only skill, instinct, and the ability to read human behavior. As New York's economy expanded, the broker's role grew increasingly vital. They became intermediaries between capital and enterprise, facilitating trade, creating trust, and laying the intellectual and procedural groundwork for the organized exchanges that would define Wall Street in the decades to come. The early brokers were more than mere facilitators of trade. They were architects of a financial revolution. They devised methods for conducting transactions, tracking prices, and standardizing agreements. Some maintained meticulous ledgers, noting every purchase and sale. Others pioneered new practices, like posting publicly available price lists for bonds and shares, allowing investors to make informed decisions. Their offices became hubs of information, where news from Europe, government announcements, and local commerce all converged into actionable intelligence. In this sense, brokers were both accountants and analysts, navigating an uncharted market landscape, where every decision carried significant consequences. Among these early brokers were men whose names may not echo in every history book, but whose influence was immense. They were innovators and strategists, blending intuition with a meticulous understanding of supply, demand, and human behavior. They negotiated deals that involved more than money. They brokered trust between strangers, enabled commerce across the young nation, and connected capital to opportunity. Their actions demonstrated an emerging sophistication and financial thinking, from risk assessment to portfolio management, long before such terms existed formally. Each broker became a small node in a growing network, a network that would eventually evolve into the New York Stock and Exchange Board. These men were conscious of their historical moment. They were building a system that could withstand the pressures of speculation, recession, and the occasional panic. City growth has totally boosted these brokers' influence. The streets of Wall Street became lined with offices and gathering places where deals were struck. Prices were debated and reputations were made or broken. Brokers formed alliances, shared intelligence, and sometimes engaged in fierce rivalries, each striving to secure the best deals and the trust of wealthy investors. Their impact was far-reaching, shaping not only the fortunes of individuals, but also the trajectory of New York's economy and, ultimately, the nation itself. By laying down informal codes of conduct, advocating for standardized procedures, and creating systems for accountability, they transformed Wall Street from a chaotic marketplace into a structured environment capable of supporting sustained growth and complexity. The early brokers' contributions were not confined to the streets of New York. They set the stage for the global financial systems we recognize today. By creating standards, fostering trust, and cultivating networks of information, they allowed investment and speculation to flourish in a controlled and predictable manner. Their work enabled companies to raise capital, governments to fund infrastructure, and ordinary citizens to engage in the financial markets in ways that had previously been impossible. The rise of these brokers signaled a shift in economic power. The ability to influence trade, finance, and commerce increasingly rested not just with landowners or politicians, but with men who understood the rules of money and the subtle dynamics of trust and negotiation. Over the decades, the profession evolved, growing more sophisticated as technology and regulation advanced. Telegraphs and telephones replaced messengers, ledgers were replaced by computers, and trading floors became hubs of rapid communication and complex strategy. Yet, even as modern Wall Street became dominated by skyscrapers, digital tickers, and high-speed electronic trades, the principles established by the early brokers remained foundational. Trust, accuracy, and the ability to navigate human behavior continued to be the pillars of financial practice. Each panic, boom, and bust that followed the crashes of 1837, 1929, and beyond traced its roots back to the systems, practices, and ethos these pioneers established. Today, the legacy of the early brokers is evident in the architecture of Wall Street itself and in the culture of finance worldwide. Their pioneering efforts remind us that the marketplace is not merely about numbers or transactions. It is about relationships, responsibility, and foresight. They demonstrated that even in a chaotic, unpredictable environment, careful organization, collaboration, and integrity could create a structure that supports enormous growth. As we trace Wall Street's history from these humble beginnings to the towering skyscrapers, complex trades, and global influence of the modern financial world, it becomes clear that the rise of Wall Street was not the product of chance, but of visionary individuals whose ambition, intellect, and courage laid the foundation for the financial empire we know today.